What is up, investors, and welcome back to the Everything Crypto Show. I'm your host, Everything Crypto, here to bring you the latest and most important news moving the crypto markets. Now, as always, please remember that nothing on this channel is financial advice. These videos are for viewer education and entertainment purposes only, so please invest responsibly, as I want this community to thrive in the long run, and I love and appreciate you all. And on that note, we have a very important video to get through today. We got to talk about what the Fed said yesterday that sent the market spiraling to the downside. We have confirmation that Ripple is working with the World Economic Forum, some major updates coming to the Cronos chain very soon, as well as some strict deadlines being set on both Voyager and Celsius. So tons of important stuff to break down, and without further ado, it is time to sit back, relax, grab that morning cup of joe, and enjoy the show. Now, I did just want to ask that if you've not yet hit that sub and like button, please consider doing so and joining the Everything Crypto Squad, as the number one goal of this channel is to bring you all of the news that you need to know on a daily basis in one video. Also, go ahead and drop your questions in the comments down below, as we will be starting the Sunday Q&A stream again, and I do hope to see you there this Sunday at 9:30 a.m. EST. So on that note, we are going to get into the charts like we always do, taking a look at Bitcoin and Ethereum, and now you can see that Bitcoin is just at 20.6K. So we are just hanging on above that $20,000 level of support. We are well below that 200-week moving average here at 23K. So we are looking pretty bearish from technical indicators, and the fact that the fundamentals are also looking pretty bearish at the moment does lead me to believe that we will most likely break down back below that 20,000 level. I would not be surprised if we even come back to retest that June low at 17.5K. Now, taking a look at Ethereum over here, I also think that if Bitcoin is going to go ahead and retest that $20,000 level, that Ethereum will definitely come down to retest that $1,400 level, which is its 2018 all-time high. And if Bitcoin is going to break below 20,000, it would definitely not be off the table for ETH to come back down to this 200-week moving average here at about 1220. Do keep in mind that we are a couple of weeks away from the merge. However, there have been a ton of concerns raised really within the past 24 hours that we are going to break down in just a couple of minutes. But for starters here, we got to talk about why exactly Bitcoin has been tumbling so hard, and that is because Jerome Powell did speak today, and he sent the markets into panic mode because he was definitely a lot more hawkish than traders were expecting. He says right here that reducing inflation is likely to require a sustained period of below trend growth, while higher interest rates, slower growth, and softer labor market conditions will bring down inflation. They will also bring some pain to households and businesses. So Jerome Powell and the Fed, they are not concerned about a soft landing. They are really trying to curb inflation here, and they pretty much came out very, very hawkish today, making it very clear that they do not care if this does require an economic slowdown, a softer labor market. They're going to do what they have to do to get inflation under control, because they could not get that money printer under control when they just had it going non-stop 2 years ago. So definitely very interesting here, and obviously as the Nasdaq and the S&P traded down, the Bitcoin did follow suit. We have talked about this correlation for a very long time between Bitcoin and the overall indices. So the S&P and the Nasdaq were down 2.3 and 2.8% respectively. So Bitcoin does tend to trade at a beta of about 1.5 to 2x of the indices. So it was down 4% today, and Ethereum was down 7% today. So definitely a very ugly day across the equity markets, the crypto markets. And yeah, the speech today at Jackson Hole really did throw people for a loop. Now, personally, I was not that surprised, as inflation should be the main concern here for the Fed. And really, there are not a lot of positive catalysts coming up. The economy is definitely still in a slow pace of growth. So I think it just makes more sense for the Fed to be hawkish now and really fight to curb inflation, as opposed to trying to like artificially propel the economy when we are in a slowdown period anyways. But to put things into perspective, the US stock market wiped out 1.25 trillion today, and that is literally the total market cap of all cryptocurrencies wiped out in a single day. In fact, let's take a look at what the total crypto market cap is now. It's 971,000. So this should just give you guys some perspective on exactly how early we are to this party. Just think about that. 1.25 trillion was wiped out of the stock market alone today, and the total crypto market cap is worth less than that. So just some perspective for you guys. We are still very, very early to this party. And as we are early to crypto, that means we are going to experience much more volatility, as you can see here by the absolute bloodbath that has occurred. Oh, by the way, I did buy some more quant at $100. Nobody asked, but I was just throwing that in there. So anyways, we also got to talk about some things happening outside of the US, because the US is having a rough time, but it is not just them, okay? This is really happening on a global scale. We can see here that in the UK, energy bills are expected to rise by 80% in October as regulators does announce a hike, and this is absolutely horrendous. So there are 4.5 million households on prepayment plans that are facing an increase from £2,000 up to £3,600. That is absolutely insane, and that is not even the end of it. In fact, they're forecasting here that the cap could rise to £4.6k in the first quarter of 2023 and 5.3 in the second quarter. So this is just the beginning, this 80% hike in energy prices. And this is even worse because the UK was actually still suffering from pretty rampant inflation before this announcement. Like over here in North America, we did actually get a lighter inflation read in both the States and Canada, which was well received by the markets. But in the UK and other European countries, the inflation readings have still been ripping. So this is definitely not going to help. And now, to make things even worse, in France and Germany, they have declared an official energy crisis. The continent's leaders are holding an emergency meeting to discuss this ongoing crisis after the energy market surged more than 25% on Friday. And just take a look at this chart. This literally looks like Solana did in the previous bull run. This is not. This is energy prices. So we got a hawkish Fed in the States. We have inflation ripping in the UK, in France, and Germany, now in an official energy crisis. And we also have the Venezuelan dollar, which did actually drop 35% against the US dollar this week. We have been keeping an eye on the DXY, which is the US dollar index, which has been absolutely ripping to the upside, which is a sign that we are in a risk-off environment. And yeah, the Venezuelan currency here has not fared well versus USD, dropping 35%. Once again, Bitcoin does fix this. So in my opinion, this is like oddly bullish for Bitcoin because it really demonstrates why Bitcoin is necessary as a global asset reserve. However, in the short term, this is just causing people to freak out, and it is not faring well for Bitcoin, which is still viewed as a risk-on asset. Now, we did have some news here from the SEC delaying the decision on a Van Eck Bitcoin spot ETF application by another 45 days. They filed this application in July of 2022. They have made multiple similar applications in the past that have been rejected, and the SEC has cited market manipulation and lack of investor protection as reasons behind rejecting spot ETF applications. So once again, they're trying to make it sound like they are trying to protect investors, and that's why they're doing it when they allow things to trade on the penny stock exchange that are far more risky, have far less of a market cap than something like Bitcoin. Literally the absolute blue chip, the gold standard of the crypto industry. So this is just absolute BS in my opinion. The SEC is really harming that development and growth of crypto in the United States. I know personally here in Canada, we do have spot ETFs that I take full advantage of. It is very advantageous to have these spot ETFs, to put them in a tax-free account so that when the bull market does come back, when it is time to cash out, you are able to do that without giving the government a single penny in taxes. So definitely very disappointing to see that the SEC does continue to delay this. In fact, a former SEC chairman called on the US to embrace crypto efficiencies before the final regulations. So we had Jay Clayton over here pretty much noting that amid all of the controversy within the SEC, the government should first embrace the benefits of crypto to the financial system before enacting any regulation. And really, he's citing benefits such as the ability to power quick payments alongside custody of assets digitally, and called on the SEC to provide guidelines for the custody of tokenized assets. And he's absolutely correct here. The actual tokenization of assets of some sort of a stable coin, a digital dollar, would be absolutely huge for the US, really fostering that growth in financial technology. But the SEC is too resistant because they see the potential that crypto does have to overthrow the current system, and that is why they continue to try and harm the adoption of this space. So really interesting to see that even former SEC chairs are getting fed up with the current administration, and they really are harming the US in terms of that crypto adoption. Now, we have some very important updates here on the Tornado Cash situation. We have been keeping a very close eye on this. Yesterday, we did talk about the potential for Tether to actually join Circle in freezing Ethereum addresses, and we do have an update on that today. However, there's been some really interesting news that came out about the Tornado Cash dev that was arrested, Alexei Pirtsev. So he was arrested about a week ago for his involvement in actually developing Tornado Cash, and now it is effectively being revealed that he may have actually had ties with the Russian security agency FSB. So now this is going beyond just a simple matter of security and privacy on the blockchain. Now this has become a political issue as well. The only thing that I will say here is we cannot confirm if this is true or false yet. And if it is true, then obviously this would be a very big concern, and it would explain why the Dutch police did arrest him in connection with Russia. However, this could also not be the case, and it could be used as some sort of an excuse to really justify their arrest. And really, the big problem here is that at the end of the day, he was still charged with using the crypto mixer Tornado Cash to facilitate money laundering, and that cannot be proven. He simply developed a privacy decentralized application. They cannot prove that he did it with the intention of allowing money laundering through the platform. So definitely still a lot to be worried about here. And I did actually read some more news from Tether yesterday because I was really concerned that they would follow in Circle's suit and actually freeze Ethereum addresses. And after reading a lot more about it, it didn't really help my bad feeling at all. In fact, it made it worse, because what Tether basically said here is that at the moment they are standing firm on their decision to not freeze any funds. However, they are keen to stay far away from perceived sanctions violations, and if they are actually told to go ahead and freeze any addresses, they will comply. So they definitely they've said that they're not going to do it in the meantime, but they pretty much did admit that if they were asked to go ahead and follow suit and begin freezing Ethereum addresses, that they would in fact do so. So very concerning, and I really think that since we've already had Circle do this, if we also had Tether do this, keep in mind that Circle and Tether make up over 10% of the total crypto market cap, and if people lose trust in these two stable coins, I think it is going to be a very, very ugly scenario for the markets. Now, it is not just stablecoin providers, but we also had a Binance here freezing a $1 million corporate account due to law enforcement request. Binance has not made it clear at all what law enforcement agency actually requested them to go ahead and freeze these funds. They have also not clarified why these funds were frozen in the first place. So suffice to say, guys, if you think that your crypto is safe on these exchanges, if you think that it cannot happen to you, be warned, okay? These companies, these centralized exchanges, even stablecoin providers can freeze your funds. Please look into a cold storage wallet to have true ownership of your assets. I can't say it enough. I have no referral code here. I simply say this for your protection, as clearly you cannot trust your crypto with these bigger entities. And that is really the whole point of crypto, is to give the power to you, to give the money to you, have true ownership of your own assets, and not have somebody self-custodying them like a bank or these centralized exchanges, which are effectively the banks of crypto, right? Like, let's be real. So anyways, we also have the Ethereum merge countdown in at T-minus 20 days. It is set for September 15th. It is now August 27th, so we are very, very close to the merge. I am definitely very bullish on the merge. We did talk about the significance of it, of the reduction in issuance, in the energy efficiency of the Ethereum merge. So I am very bullish on this long term. However, there could be some short-term hiccups that we will take a look at in a second. But first, it is important to announce that Coinbase officially launched their Coinbase Eth, which is effectively their version of wrapped ETH. So we talked about this yesterday, but it did officially launch today. And effectively what happens here is when you stake your ETH2 tokens, you're going to receive an equivalent value of CBETH. There is no fee to wrap, and CBETH can be sold or sent off of Coinbase as an official ERC20 token. Now, the price of CBETH is intended to reflect the accrued interest earned on the underlying staked ETH. For this reason, the prices of CBETH and ETH may differ. So, for example, if you locked up your Ethereum and you received CBETH in return, and let's say you were getting a staking rate of 5%, if Ethereum was $1,000, CBETH should be $1,050, as CBETH over here would actually represent Ethereum plus that 5% interest on 1,000, which would be $50. So for any of you who are a little bit confused on how exactly that works, that is why CBETH should actually be gaining value against Ethereum. And if it does not, then be warned, something is very wrong over there at Coinbase. Now, getting into some Ethereum FUD that we have seen spread over the past couple of days, there is the potential that Ethereum could get kicked off of a cloud host that powers 10% of the crypto network. So Hetzner over here, a German company, they host roughly 10% of Ethereum nodes, and they are now saying they do not not allow mining or anything even remotely related, including staking. So this is very, very weird. They've just updated their terms of service to specifically bar crypto mining and staking. They say here that using our products for any application related to mining or staking is not permitted. This includes Ethereum and any proof of stake or proof of work transactions. So if Ethereum is forced off of Hetzner, it would further whittle down where it resides, raising the question of just how decentralized the purportedly decentralized blockchain really is. Spoiler alert, guys, it's not decentralized. We've been talking about this on the channel for months now. If you think that Ethereum or any of these altcoins are decentralized, you are strongly mistaken. The only crypto that we can make an argument for that is decentralized would be Bitcoin, and that is because Bitcoin was made anonymously. It was not governed by anybody, but the matter of fact is that there are a couple of node providers who do run majority of the nodes for Bitcoin as well. So if you want to take a look at just how centralized Ethereum really is, here is the chart to put things into perspective, and you can see right off the bat that 53.5% of the Ethereum mainnet nodes are run through AWS. So right off the bat, what if Amazon was to go ahead and actually ban their services for crypto mining and for staking? Well, then half of the Ethereum mainnet would have to up and go somewhere else. So it is incredibly centralized, okay? And Hetzner here is not 10%, it is 16% of the Ethereum mainnet. We have Oracle Cloud at 4.2%, Alibaba running 2.9%, Google Cloud with 2.7%. So there are these companies all over it, but really between Amazon and Hetzner here, you're looking at about 70% of all Ethereum nodes run on just two providers, which is not decentralized whatsoever. But I will point your direction to Avalanche over here, another very dominant L1. And you're going to notice that this pie chart here looks very similar to how Ethereum looked, with 43.6% of the validators being run on Amazon.com, AWS, another 12.4% on Hetzner. I know we also have Google Cloud here. I don't see Oracle. We have Microsoft in here, though. And you can actually, they break it down by geography for you. And over 43% of the validators are in the States, 31% in Germany. So really, this is no different. That's why I've said from the very beginning, the whole, decentralization hype, it really is just that. It is just a farce. It's just a hype word that people throw around. Crypto is not decentralized, and it will become less and less decentralized over time as big money enters the space. And guess what? That's okay, because if big money enters the space and we are here before the big money, then we are set to benefit from that. And that's my whole perspective on it. It's always been my perspective really from the beginning. As soon as I figured out that decentralization, true decentralization, is very hard to achieve, and it probably will not happen, especially given the institutional interest that has already kind of entered the space, right? So on top of this, Ethereum devs are actually raising some concerns ahead of the highly anticipated merge. And I mean, this is something that I'm not too concerned about. Honestly, I would love for the Ethereum merge to get delayed, and I'll explain my perspective on that real quick. Quite simply, I think we're in for a very ugly Q4. I think that regardless of if the merge goes through or not, that the micro cannot outweigh the macro. We are in a very ugly macro environment right now, and I don't even care if ETH 3.0 came out in the next 20 days. I don't think that it's really going to have a significant move for Ethereum to the upside. So if this merge gets delayed on top of the terrible macro condition that we are in right now, yes, the markets would go even more to the downside, but guess what? That means even more Ethereum for the same amount of dollars. So I honestly, I'm very bullish on the merge, but I would love for this merge to continue getting delayed, because eventually I do trust the Ethereum Foundation to deliver, and it's going to have a massive impact on tokenomics. So I would not mind having more time to buy Ethereum, which is why I'm kind of indifferent to the whole thing. But I do really suspect that the merge will go down in mid-September. I just don't think that the price will appreciate much given the macro once again. Now, we had a very big announcement here from Coinbase. They are finally listing Hedera. This is massive. I have been calling for Coinbase to list Hedera here since like the beginning of the year. In fact, I remember saying a couple months back when it was rumored they were going to be listed that once again, I was hoping that would not be the case, because I wanted to buy as much HBAR as possible before it got listed on Coinbase. And we did just that. We loaded up a ton of HBAR throughout this bear market. And given all of the SHIT coins that Coinbase has been listing on their platform, it is finally time that they showed HBAR the respect it deserves. And it is planning to be listed alongside Near Protocol here. Another solid project for sure. Not one that we are personally invested in, though. Now, we had a massive piece of news here from the World Economic Forum as they casually just kind of officially confirmed that the WEF has Ripple listed as an official partner of the organization. They say here that Ripple is dedicated to creating powerful gains in financial efficiency, equity, and inclusion. They're developing and enabling future use cases that will catalyze the new digital economy for governments, businesses, and consumers. Not only are they displayed on the WEF website, but they are also officially on the partners list. So the SEC here just continues to try and hold Ripple down, and Ripple does not care. They are growing on a global scale. There is so much happening outside of the US that so many people are not paying attention to. And the matter of fact is that around the world, Ripple is really asserting their dominance here. You can see their on-demand liquidity is heating up a ton in Japan. They sold a 1.13 billion XRP to ODL customers as the XRP usage is heating up. And they are also eyeing major central bank approved rollout for XRP usage with one of the largest banks in Brazil, TravelX Bank. This is the first bank in the LATAM region to utilize ODL, and they are also the first bank in Brazil to operate exclusively in foreign exchange, which was approved by the Central Bank of Brazil. So once again, we have Ripple just being massively adopted here all around the world. I remain incredibly bullish on XRP, on Quant, on any of these projects that are in tight with regulators and that are really trying to usher in that new financial technology. So we also have the Digital Pound Foundation here, which I've been keeping a very close eye on, and reason being is the UK is really working hard to become a crypto hub. I think they're going to be one of the first countries in the world to actually officially launch a CBDC. And guess who is on the members community here? We have Avalanche, we have Quant, and we have Ripple. So 3 projects that I am personally invested in. I do think that they're potentially going to be tapping into Avalanche for their subnets. And if you want to learn more about those, definitely check out yesterday's video. But then we got Ripple and we have Quant, which is now officially my largest altcoin position. And this is one of the big reasons why, because I really think that this centralization, the centralization projects that are in tight with regulators are really going to benefit from the next bull run. Now we got to get into another one of my favorite alts here, CRO Coin, as the network update for the Cronos chain is coming with the arrival of the Gravity Bridge testnet. So it was announced and confirmed on June 28th, and then in another announcement made on August 18th, Cronos informed users of the proposal to implement the first upgrade to the testnet on August 24th. And basically what they're looking at here are 2 big things: the bidirectional token transfers, and with this feature you can bridge transfer tokens native to Cronos chain to the Ethereum chain and vice versa. And the way this works is quite simple. If you send an ETH token over to Cronos, it is going to be locked up on the ERC20 side, and then you're going to mint a new token on the CRC20 side. And then if you want to bridge it back from Cronos to Ethereum, you're going to burn that CRC20 token and unlock the ERC20 original version, as well as the Gravity module optimizations. So the upgraded version of Pioneer 11 will feature several optimizations of the Gravity module, such as gas fee efficiency on the Gravity Bridge smart contract, security enhancements, and pruning of old attestations to save memory. Now, personally, I would rather they do take their time with this bridge. If you guys have been paying attention to a lot of the hacks that have happened this year in the crypto space, a ton of them have been through Gravity bridges, or rather bridges in general. And I think this is because there is some sort of a security flaw, just an inherent flaw when you are actually bridging crypto between blockchains, because it actually was not meant to happen, right? This is sort of like a new development. Even Vitalik has said himself many times that that is not the way crypto was intended to work. And that is why there is some sort of inherent weakness when it comes to these bridges. So I really hope that Cronos can get this right, and if they can actually facilitate this interoperability between Cronos, between crypto.org, between Ethereum, between the whole Cosmos ecosystem, that would be incredibly bullish for the future of this blockchain. Now, we also did actually see an official announcement here that really just kind of highlights their rebranding for the for the new crypto.com arena. And I just wanted to say that, again, as crypto investors, this is something that we don't really look at too too much, but we need to acknowledge here that there are a ton of people that have no idea. Well, I'm sure everybody knows what crypto is at this point, but we still have so many people that are not invested in crypto. I believe under 5% of the world's population is invested. So to put things in perspective here, now you have a ton of people who are going to go to the crypto.com arena, and when crypto does finally pique their interest, when it does become a part of their everyday lives and they need to hop on a centralized exchange, who are they most likely to go to? I think it's going to be crypto.com. So as someone who's kind of been in the crypto space for a while, I do kind of overlook this sometimes, but the advertising is absolutely massive for onboarding new users, which is exactly what they are trying to do to really assert their dominance as the #1 exchange. And if that was to happen, that would obviously be very, very bullish for CRO Coin. Now, to wrap things up here, we're going to talk about some exchanges who have not been as responsible as Crypto.com. Starting off here with Voyager, we have a ton of companies actually bidding to take control of Voyager's assets, including Binance, including FTX, who Voyager actually struck back at for lowballing them. And apparently Coinbase is now out of the deal. However, they are being put on a very firm timeline. Bids were to be submitted by today. They are now slated for September 6th, with a sale hearing to take place on September 29th. Existing and potentially new bidders have requested additional time to get information and submit their offers. So it would appear that at the very most, by the end of the year, we will have some sort of confirmation on what exactly is going on with Voyager. Are they going to restructure, or are they going to get acquired? Honestly, I don't care what happens to Voyager. I just really want everybody to get their money back. And the same can be said here for Celsius, who has actually been caught with a massive discrepancy in their balance sheet. They did actually show a balance gap of 1.2 billion. However, it has been confirmed that their actual debt is 2.85 billion. So they can't even get their debt straight when they're filing bankruptcy. They continue to lie. A lot of shady practices over here, and a lot of it actually does have to do with the Cell token and the way they value it. Now, you guys may remember we actually covered this a month back, because I noticed right off the bat that Celsius had actually valued their own token assets at 600 million. However, according to CoinMarketCap, the entire market cap for Cell is only 494 million. So one of two things was happening here. Either Celsius just blatantly lied about the value of their Cell, or they actually printed more Cell than they had gone ahead and told the public. And that was not a lie, but they're just lying about the tokenomics of their project, which is skewing CoinMarketCap. Either way, not a good look on Celsius to have this massive discrepancy of about like $1.6 billion. So definitely very interesting. You're going to notice here that they had about 100,669 Bitcoin deposited by investors, and they have lost 62.8K of that Bitcoin, now only having 37.9 thousand Bitcoin left, and they are planning to actually use their Bitcoin mining operation to go ahead and bring them out of bankruptcy. But with rising energy costs and the lowering price of Bitcoin, Bitcoin mining is not very profitable at the moment, and I do not foresee this plan working out, unfortunately. Once again, if you are impacted by these withdrawal halts at Voyager or at Celsius, I do sincerely hope that you get that money back soon. And that's about all I got for today, guys. So thank you for tuning in. I love and appreciate you all, and I hope to catch you in the next one. Also, tune in for the Sunday Q&A stream tomorrow. I am very excited to get back on that, and I hope to see you guys there. So peace out for now.